There are two major trades everywhere, setups that happen every single day, and you can enter them and make money off. One is in London zone, the other one is in New York Hill zone. You can use any strategy or any entry point criteria to enter the trade, as this will be only a framework for everyday use. So starting with this, I've been trading USD for a long time now, and every day I want to come to the charts. I want to see something that is very specific, and that's what I'm trying to teach today. Now, a lot of people would say, all right, we already have a lot of strategies that I using personally, so which one to use? So that's another thing that I'm doing today. I'm not giving you a new strategy because you have the unintegrated. This is, for example, a CSD, for example, changing state delivery. You enter based on this candle, but the thing that I'm going to teach you today is when to look for this entry. So that's the thing. It's a framework for context instead of just an entry criteria. Like, this is what I'm going to be focusing on today. So basically, we have two potential trades a day for enter off, one in London and one in New York Hill zones. Those are the trades that I really look for on a mainly daily basis, and are the cleanest trades that I should be looking for. Let me start with this. So the first of the day from 20, which is 8 p.m. to midnight, all in EST time, New York. So this is going to be your Asian session, and most of the time it's going to be a consolidation. And let's say in a bearish example, here is, let's say midnight open. All right, so that's midnight. The price started to go where? Started to go up. So we ping the Asian high, and then just no break of started. Need a sweep and a break of structure. Now this by itself, when it happens at the right time and the right place, what I mean by the right time, the time for our manipulation, so most likely from 1:30 a.m. to 3 a.m. or it could be extended to 4 a.m. All these times that I'm mentioning are in the New York time zone. Now most likely I want to see this when the highest probability, right? So we want this to the high probability trade. So this needs to be happening inside of a PD array on the higher time frame. So this is a higher time frame point of interest where pi actually reverses from on the London kill zone. And if you actually full video about itself in details, I published it 2 days ago recently about this, so watch that video. As soon as price comes to that area, we have different ways to enter this trade. That's your first trade, which is simply a sweep of the Asian session inside of a higher time frame PD array. That's the first trade. And either you enter aggressively for here, or you wait for the price to break structure and come back into the actual range. So different ways to trade this. But again, I'm not going into the details about this. I have a full video about this. I did it 3 days ago. Check it in the channel. What's the advantage of seeing this? When I see this, let's say price continues going lower, and then almost New York is about to start. This right here is as high as now a Judas swing, or manipulation, or deviation, whatever you call it. So this manipulation here would actually tell me what the bias is. The bias is always on the opposite side of the manipulation. So manipulation to the upside, and then means bias is going lower, so we're up bearish. So this manipulation here is very important to notice, especially when it happens inside of a PD array or a point of interest in the high time frame. And why is that? Because when this happens into a PD array, it's telling me nothing but all of this is a market maker's model to go lower, maybe to this lower or even lower. So market maker model on the higher time frame, so something like this. We have this PD array here. We're going to go. Now we have what? A move of internal to external liquidity to this low, which could be this one or another one below. And also just looking at 4 hour to see this, we have a 15-minute market maker model. It's going to be a PD array on the 4-hour time frame, and we have a full on that later on. This manipulation by itself is going to first of all give you the first opportunity of the day in the London kill zone, and the second thing is telling you the bias. So now I'm going to be looking for price to continue lower, even on the New York time zone. So how do we look for an entry? First of all, the market structure shift should be happening here. So there's need to be a market structure shift in order to validate that this is a manipulation to go lower. But for the entry, you can actually enter here immediately without the market structure shift. But for the bias, you need to see the market structure shift in order to validate it has achieved the swing according to the bias. That's the first thing. So now we know that we're actually having lower, and we have the Asian session lower here. So there's two scenarios. The first one is the price not taking the low inside of the London kill zone, and here we start the New York kill zone, and we didn't take the low in the New York kill zone. Most of the time we're going to take it in the New York kill zone, so we're going to be actually retracing it here to go lower and take that low. Now there's some scenarios where actually in the London kill zone would be taking that low, something like this, and we're going to take that low and expand below it. And this also happens. That means that this is not the low of the market maker model. There is a lower that is below, or the main draw of liquidity, or main value that could be rare there. So this is why on the New York cool zone is going to happen the same thing, retracing up and then coming a bit lower to that PY. That will be going to be the ultimate target. So either price expanding and actually breaking through the Asian low, or not taking it and taking that level on the New York real zone afterwards. So two scenarios here. So what is it going to be? Very simple. I look at the examples, but like say it's not taken. So right, we're going to have market structure shift and everything. And we have, for example, of the starting of New York hill zone here. I say Asian, London, and New York. What I want to see is two things: either price coming back to OTE, which is if I grab my fib from the high to the recent low, for example this one, because this one did not retrace to OTE, but this one did. So from here we can see that price did not retrace, and then it was going up, and it retracing back to OTE to 0.18, and that's one entry. If price comes back to OTE from the price action where we're having it there, or it could be just a regular fair value gap or a liquidity, you see. Continuation, purge to go lower. Different types of entries to use here, and we're going to go over them, but this is your framework of the day. You see, Asian session being here, London kill zone, trade is the sweep of liquidity, the Asian session, and then establishing the bias based on this manipulation here. We start to go lower. We know that because we didn't take any major liquidity level, so we're going to go lower. We can take a continuation on the New York kill zone, going up either into fair value gap into OTE, or liquidity purge going lower. All those scenarios, like, you can look at this as same as bullish example, just upside down, right? So there's times that this is not going to be happening. One of those times you don't have a clear point of interest here. This is not going to be as clear as this or one direction. When we also don't have a break of structure here, like this, we don't have a clear break of structure. So most likely price is going to go up and take that high again. So a lot of different scenarios there, and we're going to over them. And this is just sharing my experience regarding this. So you can have 2 trades a day using this logic, this framework by itself. And we're going to trade the London kill zone and see how it goes. And we're going to come back on the New York kill zone, again, set alerts and see how it goes. So this is on the Eurodollar, M15, and this is the pair that I traded the most. And I want it to be relevant here. I want to share things that I see every day. So these are the things that I discuss in this core almost every day, and these kind of things I almost look for entry every day. So we're going to stay for this day, and what's going to happen here is, first question will be, do we have any higher time frame PD array below the Asian session in this case? Because this is where price was going to. And this is where it looks going to. So below the Asian session, do we have everything? So let's see the 4-hour time frame. And what I'm seeing here is that we have nothing. We don't have anything, absolutely nil. No order blocks, jack shit. We have equal lows, 4-hour low, and coming back to 15 minutes, this is the only PD array that we have. So relative low, and fair value gap doesn't matter that much. There's also a low here, almost equal lows. And this is the New York kill zone, previous one. Now, how do we trade this? So this is the thing. We look at our Asian session and we look for a deviation above or below. So in this case, it's just going below. So we have a PD array here. This one is taken, and we have immediate reversal that happened. A sign of weakness, kind of, the price can't go lower no more. In here, you can look for a change in state delivery, CSD, in the lower time frame, or a turtle soup strategy that we previously used, or a market maker's model, just for the actually entry criteria there. But the important part is the looking of the framework. So we got two hammers, or two a candle with a displacement, and that breaks the existing structure, and we have the fair value gaps, and we actually closed above with a fair value gap, which means that we have an inverse fair value gap. So now price comes back to it and starts going up. So then we have this range, and we expect price to going lower into OTE, into going higher again if the main low drawing liquidity is not hit. So let's go to the previous example and show you this. We have an Asian session, for example, deviation to the upside, right? And it's bullish here, like there. What this means is that we're going lower, and this is exactly what happened. We're going lower, but the thing is that we did not actually give a market structure shift until when? Until here. So, and this price, in this price action, and it just retraces up here. Let's take a look at this. So if we pick up the Fable, there we go. And that's an OTE. So we want to look for the OTE on the New York kill zone. So from here to here, and then OTE is right there. And we have no fair value up. And because price was going up. And what happened here is sometimes it gets tricky. This is why you want to build experience based on this. But what happens is that price sweeps the high and then going higher. But sometimes it gets tricky, right? But sometimes it's actually very clear. For example, here, we can see that if we can switch here to, let me put a line of 4 hours, if we can have anything on the higher time frame. Right here we can see that we actually have this liquidity level here, the 4 hour high again. Same thing has happening previous day. So back to the 15 minutes, what I see here happening is that we took that 4 hour high right here, and the same thing, previous kill zone high, which is the New York high. So price was coming here, Asian session was here, and we started going up. All I want to see is liquidity sweep above that Asian high into a higher time frame level, and then going lower. I want to see it, preferably a market structure shift with displacement, and then an imbalance, normally a fair value gap, for us to have a model 22 unicorn entry. So still there's no market structure shift in London, and we waited pretty much until, yeah, we kept going up until the high time frame level, then we started going lower. There is this market structure shift, and that's already on the New York kill zone. And if you were able to enter there in this change of state delivery here, but that break of structure there confirms that we actually have this die, which is the high of London is going to be the high of the day. So what I'm going to be looking for the rest of the day is being short, because actually this confirms the existing bias. So we started going lower. We had the fair value gap to enter from. We started going lower, and at the start of the New York kill zone, we pushed and we broke structure. Now from this level here, which is the Joseph swing, to here, we did not retrace to OTE. And now here, we retraced perfectly to OTE. It's very interesting. As you can see, we have a 0.6018 to 0.7 hit on the fib, and coming back, see the price coming back to a fair value gap, which has an inducement inside, and sweeps that level into the 618 and 70.5, which is the OTE zone from here to here. And that's the OTE. So this is where price reacted from and started going lower and going where? To a 4 hour low. Remember this 4 hour range? 4 hour candle. We took the high of the candle and we're all the way to the low of the candle. So that's the existing draw on liquidity here. It's not the main one, but it's the major one compared to the one that we came from, the deviation that happened. So this is the draw on liquidity. Now this is one trade. Right, so now we're going to look into a different example. For example, this, we started going higher, but there was no major market structure shift. this is not the high of the day, and then there's like high impact news, so not really comfortable to trade the existing structure price. Again, we same situation, we're going lower into a big fair value gap here on the 15 minutes, but then there's no major market structure shift that we can see here. We're not able to break above the level. So what happened here is sweeping the London low, and this is also can happen, but it's not the framework that I want to go over today and explain, because this could happen. And you need to understand, if it doesn't break structure, should I trade? And this is the main point. The ability to discern a good setup to a not so good setup, because you will have more probability and you'll create a plus trade. So in here we have an Asian session and you have deviation below it. Now we could go 4 to 4 hour, 1 hour, see if we have any fair value gap. Most likely we have one here. So two consecutive fair value gap with an inducement inside of it right there, directly on the actual order block. You can see an entry from here, or you could pick up a change of stand delivery, or you can wait for a retracement to enter. But what happened here is not price going up and staying here for some time till the New York started. No, it's pushing up aggressively and breaking the actual the displacement above the Asian high. This is very interesting. So we have another drawn liquidity somewhere here. We're willing to go up. So what happened here is that Judas swing tells you what? That we are to push up. That's the bias. This low tells you, okay, we're gonna push. We're gonna look for long. So we started going up, and then the kill zone ends here. We wait for the New York kill zone. And if I take my fib from the low to the high, which is there, what happens is it gives you directly the entry point where you should enter in New York. 0618, right on the actual wick of the candle that actually trimmed the FVG for the next push high on the New York session, which is amazing. So manipulation, remember, always tell you the direction, and the direction is always on the opposite side of the manipulation. You can take again the fib again on this tool, and you can see another OTE is offered there. So 05705, and you have OTE there. Now you see the time zone. We don't have a clear market structure shift. That's the time where this doesn't work. Now there's another scenario where I wanted to mention, but I don't recommend trading this because it's not as clear as the others, and today I actually got stuck on this one. So let's go for this example. So we got this Asian session. We got marking, looking at this, take the fib from here to here, and we can see that neither the high or the low were taken. But what happened is that we had a fair value gap and another fair value gap that was actually reacted off the middle 50% of the fair value gap. When this happens, that's a very crucial level, and what happened afterwards is that price goes above without taking the low and just simply expanding above the highs, and we could actually look forward for that direction because that's now a real breakout. But again, you can go wrong with this. This is why I recommend trading this one right here, where we actually take the high or the low, but in this case the high, going lower, market structure shift, inducement candle, FVG imbalance, and we have an entry point. So this creates you a directional bias, validation, and an A+ trade almost 80% of the time. And I really recommend maintaining with this framework. You can pick up the OTE and almost at 50% of the actual OTE. You can actually apply this from there to there, and this is actually where the price comes into the OTE. Exactly from 79 to 618, and there we go. It should be experience where to actually take your fib from where to where. This takes some experience, you see. So this is the high of the day. That's also the low of the day. And we got more examples. This is not a high of the day. Let's discuss this. This is the high of the day and another low of the day because of the same reason we discussed. And most likely this is the low of the day here. Now for the current price action, this is how we trade, or this is the framework that we're going to go with, right? And this, we see the same thing here. Randomly, it happens every day. Low of the day, manipulation here, we go up. There we go. We can take a fib from here to here, coming to 50%. Another round examples are sweep of the Asian low, no market structure shift, another sweep going up. And this is the low day. And we started going up, we're on London low. There we go. And we can take the OTE and almost all the OTE, 50%, 68, 61. And we start going higher. That's the low of the day. So again, same thing again. So let's make sure that you know how to trade this one in London. The other one is pretty much near the New York. It's much easier to explain because you already know what your biases is, right? So this time we actually took the low again. We started going up, started coming lower and pushing up. And even though there was no clear market structure shift, but still we were seeing pushing and we were still on the low on the day. So this happened all the time. Sometimes you have a small sweep because of the news. And I think maybe CPI here. But for example, yeah, we don't have a market structure shift. We don't have that high to determine the bias. When we have the market structure shift into a higher time frame, this is where the bias is going to be very clear. So very nicely happening here. You see it taking the low, starting to go up, going up, boom, and New York completely distributes. OTE shows exactly the 0618, 61, and that's your framework. As you can see it time and time again. I mean, this is not picking days, it's just randomly choosing them. And this is a new one, another one example. So we got a sweep on the lows of Asia. We got a bias, and there we go. Let's pick up the retracement fib here, pick up the OTE here, and look at this. And there you go. And there we go. And let's see another example. Low of the day, higher of the day, and high of the day in London. It happens over and over. So at the end of the video, all I want to do is pick a strategy that I explained, just using the entry time, using this framework, watching the existing videos regarding Asia-London sweep strategy and putting all together and trade this. That's it. You don't need anything more. And the most important thing is that you don't change strategies all the time, because this is going to loop on your development process and impair it very much. So practice until you master this strategy and differentiate the real tiny little difference. So in here, I want to see the OTE continuing lower, and then in a low here. So that's all you need. Creating this high with a market structure shift inside of a higher time frame, and that's how you're going to know what your bias is. So make sure that you try it, FX replay it, backtest it, and don't trust me, check it yourself on the existing past historical data that you have access on TradingView, and let us know, what do you think? Ping me anytime that you want. Cheers, man. Bye-bye.